What is up, YouTube? Welcome back to another post trading analysis video. Took one trade today on Solana that I would like to go over. And overall, Solana was kind of the coin to trade. Nothing much happened on Pepe, on Bitcoin, on gold, or on Euro. Kind of a dry Monday. But yeah, let's just get straight into this Sol trade. So overall, as we always do, let's build some context. We're in a massive range. We broke market structure back to bullish right here. We have been in an uptrend ever since. And if this range does break to the downside, I am expecting price to not go lower than this low right here, purely because that's your market structure low backed by a 3-day demand chain. And as you guys know, if you've watched my videos, especially in the beginning, I always talk about the second demand in a demand chain. It loves to give amazing bounces. But for now, we're still in this range, and we actually hit extreme demand in this range. Okay, right here you see the 6-hour order block. It's the last demand remaining before taking the range low, therefore making it extreme demand. And as we know, price loves to reject from extreme demands or extreme supplies. Okay. Now, what actually happened on Solana is a bit different than on any other altcoin, because we actually were forming a range here and we SFP'd that initial range low right here. It's showing some signs of strength, of course. Overall, checking the volume profile, where are we on the volume profile? Around that volume area low. Okay, so we hit extreme demand at the volume area low in range discount. We create a new range. So of course we're looking for, potential buys, potential accumulations to form to take towards the range high, sweeping more buy side liquidity. Okay, so this morning I came to the charts. I realized, hey, we have that initial range low, we have that first sweep, and not only do we have that first sweep, we also have that break back inside right here. Okay, it SFP'd at first. Oh, this is the actual high. It SFP'd at first, but then overall it broke it right there. Okay, so because of that break, of course we're going to look at a potential model 2 accumulation, because we broke back inside the range right here. We can call it a breakout structure. Then checking, okay, what could be potential places for price to bounce? Well, what is extreme demand in this local range? Let's just do it till here. What's extreme demand in this local range? This little range demand right here. Again, the last demand remaining before tackling that range low. So if we're going to have a model 2, this would be the ideal place to bounce, because it would give price no reason to come lower, because all demand would be mitigated. Okay, if it went lower, it will probably just take out the main low. Why is this demand for the newer people? This is demand because we had a move up, we had a move down, and a pretty aggressive expansion followed after this retrace, indicating that buyers stepped in right here and pushed price higher. So when price comes back, you can expect a rejection, okay, or a bounce, whatever you want to call it. So looking at price action and the way we came down, when do we confirm a entry on a model 2 accumulation? When we break market structure from the top down. Okay, when we break market structure from the top down, you confirm that third tap, and that's when you long. Okay, that's when you from the top, lower highs and lower lows, just like this. Lower highs and lower lows until that high right there. So this is your main 15-minute high, but that's pretty far away. Okay, that's pretty far away. So can we dissect the market structure between this last market structure leg on the lower time frame to confirm a potential bullish break that will take us towards that more important high, and then we will reassess what price is doing? Of course we can. So we go on the lower time frame, let's call it the 5, and we can see that within this market structure leg, we have another 5-minute market structure pool of a lower high and a lower low. Okay, so 5-minute high up above is your 50-minute high. The 50-minute high is more important, but it's like a domino effect. Break that 5-minute high and you could potentially come towards that 50-minute high. Do you fail to take out that high and break market structure back to bearish? Of course, exit the trade right there and then. Okay. Then what price did was actually pretty nice. What price did is that this 5-minute high was backed by this supply range. Okay. Again, supply, because we had the two upwards candles that caused a significant move to the downside, therefore indicating it's supply. We got the rejection, and then after the rejection, we ended up breaking it. Whenever that happens, you can have a potential flip where demand or supply turns into demand right here. So what you can see is that you broke that structure, but prior to breaking structure, you had a rejection, okay? But what this shows is that supply is failing and demand took over and still ended up breaking structure. So it's showing signs of strength, okay? Whenever you have a flip, price usually doesn't come lower than that flip. It can SFP it, but especially when your flip zone is this big and this significant, you would like price to continue that internal structure from the low up, okay? You would like this structure pool to overlap with the structure pool from the top down, like this, and everything aligns, okay? That's the most bullish scenario, when this red drawing, or when price respects the red drawing and the black drawing at the same time. Again, when we have that 5-minute break right here, when do we have and when can we expect the higher low for the higher high to take place? If you break structure from the top down. Simple as that. If you break structure from the top down, that's when you confirm your higher low for the higher high. Now, the main pool, the main market structure pool from the top down, so the main pool between this point and that point, is this low, lower high, lower low. Okay? So that will indicate that you have to break this high. Again, we can dissect this further on the lower time frame, let's say the 1 to 2 minute. And then you can say, hey, this market structure leg has its own structure on the 1 minute right here. And if that breaks back to bullish, that could potentially indicate that price will make a higher low for a higher high, again, towards that 5-minute high. And from there, we will reassess. So what was actually a very nice trade is entering on this break. Entering on that break right there, putting your stop below the low, checking what price is going to do at that high. But this trade has a lot of potential because we just mitigated extreme demand. We just mitigated extreme demand on this macro Wyckoff Model 2 accumulation schematic, okay? And this is where we broke structure. So technically speaking, you're finding a refined entry with a target that could potentially be the range high, which is the target of this Wyckoff Model 2 accumulation. Of course, we have some supply above, and you can take partial TPs, but this could make for a 34% risk to reward, which is absolutely insane. And so far, price has been, trending up, so it could actually play out. Now, I myself wasn't having a proper focus on Solana whenever this trade happened because it's not my main trading pair. I realized it when it was too late, and I did realize, this is actually a pretty nice accumulation schematic, and it's showing more strength than other coins, and that's when I started paying more attention, but it's not my main trading pair. So I'm not too bothered about it, but if it keeps on showing strength like this with nice price action, I'll put it as a bigger priority on my trading list. So I wasn't aware of this trade. It was 9 in the morning. I was checking my other pairs, focusing on other pairs. And when I checked Solana, I'm like, oh, what is it doing? I realized, this was actually a very nice trade. Because the reason why I would feel comfortable entering on that 1 minute break alone, knowing this is the more important high to break, is because if we look at the volume profile of this bigger range that we're in, is there a reason why price could potentially bounce from exactly that point? From a demand perspective, it makes sense, but is there something else to back it up? Well, if we check the volume profile, look at that. It's the ultimate volume area low backtest, like to perfection. Let me get rid of that circle. Like it's literally to perfection. So we have that 5-minute flip, we have that break, we have a demand flip zone holding us up back by the volume area low. It came lower, and then on that break, you had the perfect backtest of the volume area low, and then you just could have an easy rotation back up towards the POC where you could take a take profit, like a partial, for example, because you would be up like almost 10%, which is my weekly goal. 10% is my weekly goal, so it's an absolute banger of a trade. So unfortunately, I wasn't aware of this setup, but again, just remember the setup, right? Wyckoff model 2 distribution. You enter on the break, which is backed by a flip, enter on the reconfirmation after the break, and then you had that volume area low back test on the retest, which is just, the tip of the iceberg. Absolutely amazing trade. If anyone took it, congrats. I would still be in that trade. I would target higher, but definitely take partials along the way. Now, because I saw this potential Wyckoff accumulation schematic and I realized I missed my entry, I posted about a potential LPS. Because as you guys know, Wyckoffs have LPS, which are basically just higher lows hitting extreme demand zones. So I also posted in Discord. If I pull up the picture, boom. If I pull up the picture right here, you can see I'm talking about potentially longing a higher low. You see me have that flip on my chart, a higher low, backtesting that POC and range demand to go higher, okay? That was my initial idea, and that's exactly what we got here. But I will get into that in a minute. Since I saw Solana acting really nice, I decided to pay closer attention to Solana, okay? I decided to pay closer attention to Solana, and I was realizing the range that we were forming. So if we go back in time real quick, what I saw was an aggressive expansion towards the upside. We were entering that POC right here. To refresh your mind, we were entering that POC, or it was the old POC, but as you can see right here, it was still a very high volume node right there. You can see the peak right here in the volume profile. It was the old POC, still a very high volume node. There was some supply there, nothing significant. But after such an aggressive expansion to the upside, you can expect some sort of consolidation before the next move, okay? So I was watching this range, and initially, let's get rid of this EQ. Initially, my idea was, what if we could have a range trade right here, potential Model 1 distribution to take towards that LPS long and then go higher. That was my initial idea, okay? I posted about it. Okay, let me pull it up in 1 second. That was my initial idea. So I was checking this range. I knew that we had an aggressive expansion towards the upside. I was like, probably we can expect some sort of a range to form. So I'll pull up my range like this. Range, there you go. Realized I had my initial range high, initial range low right here, and then we had that first sweep of the range high, and we had that second sweep of the range high, indicating a Wyckoff Model 1 distribution. When do we confirm a Wyckoff Model 1 distribution short? If you break structure from the low up between tap 2 and tap 3, okay, which is this pull out our market structure drawing to higher low, higher high, okay? So whenever we break this low, that's when this Model 1 confirms. And we can basically short any retest towards the range low, okay? Unless price starts pumping like crazy, then we just don't short, okay? We have to see how the retest looks, but in general, whenever this happens, we can short the retest, short the break if the risk to reward is worth it, and target that range low. There was one thing I was disliking about this range low, and it is that this range low had this V-shaped recovery. Okay, this low had this V-shaped recovery, not really having like a good target because it was backed by some demand right here. This was my thought process in this moment. Okay, I was like, a Wyckoff Model 1, yes, we have to target the low, but I don't like how we had that V-shape here. It would be way better if price could put in a high, put in a low, and then just slowly grind up from there. Slowly grind up from there, and we have that liquidity curve to target for. Now all the liquidity has already been taken because this was just one V-shaped recovery. So this would have been better, where this is your tab 1, tab 2, and tab 3, and you have that return to zone. We didn't have that here. We had that V shape. So I was like, I'm not sure if I feel confident targeting to range low, but I will reassess what happens once we come towards that range demand, right? Now, I was looking for a potential retest. So we had that break, which confirmed this model 1. I pulled out my range supply 2. We had the perfect back test right there. Literally after that break, we had the perfect back test. I think it was a 3-minute SFP still. Yeah, so it was still a 3-minute SFP, but I've seen it too often where it's a temporary SFP and then it ends up breaking. Okay, so right here I started scaling into my position, and I knew the risk to reward wasn't the best. Right, I knew the risk to reward wasn't the best because I had to short right there, and I had to target initially that range low. But we know that it can come down all the way here, which was our macro plan, a distribution short into that LPS long. But I would really have to, see what happens at this demand zone. So I started scaling in here, and then I scaled in more on the retest, okay? Because oftentimes when you have this immediate rejection, like this immediate perfect rejection going lower, you like to come back to mitigate more before going lower. That's like, I've seen that too many times. That's just experience, okay? But these are all like little tips that you should really pay attention to, Whenever you have like a perfect retest immediately after the break, you like to come back to retest and mitigate more before going lower. So I was aware of that, but I just knew I was safe once I put my stop above that third tab high, which is the clear invalidation of this Wyckoff. Now, letting price play out, what did we end up doing? We end up going higher, and I was like, okay, if I had to call something extreme supply, it would be like this last downwards candle, like this 1-minute order block, right? That already got mitigated on the candle after it. So right here, you had this order block, got mitigated the candle after it. So if there's some sort of supply left, it should be above that one. Okay, so this was really my extreme supply. So I was like, okay, we have structure. We have structure going up. So if we break this low, there's really no reason to come towards this high again, because you mitigated all remaining supply before taking that high. Because I wouldn't even call this supply, but if I had to call something supply, it would be that. Okay, so I was like, once we break this low, we're good. This would just be the LPSY of the Wyckoff. The same way we have an LPS, last point of support, you can have a last point of resistance. Okay. So I was like, if we break that low, we're good to go. And then what happened is we indeed broke that low, actually having like a tiny little distribution itself, a 1, a 2, and a 3, leaving behind this 1-minute order block, which is now the last supply remaining before taking the range high. So it's okay, we broke that low. We could come back for a retest, but mostly I would want to see it go now. That was my initial idea. I was like, okay, yeah, we can come back, but I really want to see it move in order for this to, still look clean. And we came back very aggressively, got the rejection, but the way we came down from here, so the way we came down after having that rejection, if I get rid of that supply and you see this mitigation, look at the way we came down. Let's make that our original liquidity curve. There you go. So yes, we mitigated all supply, but the way we came down, we still gave price a reason to come higher before potentially going lower. And it was this liquidity curve. And this is where I made my mistake, because I started scaling in on this break and then, a bit more on that break. So I had an average entry, around here, around 140.6. And I was like, you know what? There should be no reason for price to come higher. Once I saw that break right here, literally once I saw that break right here at 1534, I was like, there's no reason for price to come higher again. We broke it. There's no supply remaining. And at that moment in time, we didn't have these liquidity highs that perfect. You know, these three highs, 1, 2, 3, followed after that. And I wasn't paying the most, like the closest attention. So I trilled my stop loss here, only risking a little bit of my money now because I wasn't 1% risk full in yet. Just because the way it was acting up, okay? So I was kind of de-risked once I put my stop there, and I didn't pay much attention. And that's where I made my mistake, because what happened is we had that squeeze up. We had that squeeze up to literally put in an equal high right here, which on Mexi, it actually took the high. So I got stopped out, and then we got the move down. Boom. Very, very, very unfortunate. Very unfortunate. But I've already witnessed this once before, and it's a very typical play for especially Solana, but in general, every Wyckoff can have it. But it's a very typical play for Solana, especially to do. It's, to potentially put in an LPSY. You think this is going to be like the lower high, right? But then the lower high comes down with a liquidity curve, and you shoot back up once more before you dump down. Because once I saw that move up, I was like, oh shit, I saw that with spread and on Mexi, I got stopped out for like a tiny, tiny loss. It's not significant at all. It's like 0.3%. But I realized like, oh shit, this can be, a bigger Wyckoff schematic where we have that move up before coming down. And when I see that, I know this distribution is going to have follow through. Like whenever this happens, it shows like the last ultimate market maker involvement, grabbing all those stops, even my stop, before moving lower. However, there was no reconfirmation in this leg up. Like in this leg up, there was no market structure to wait for to go back to bearish. So I also couldn't re-enter, after realizing I got stopped out, I couldn't re-enter. So it's kind of unfortunate because, once you see this and you see it, behave like this, grabbing those last stops, it's going to have follow through because it shows proper market maker involvement. This can just be like some candles on the low time frame. It can work, but once you see that pop up before dumping down, it's going to dump down, literally. And it made me think of another scenario, which I actually traded properly on May 7th. Yeah, my brain works crazy. Like, I don't know how I remembered it, but here. And this is where you can see what I mean. Because I actually traded this... I traded this Wyckoff Model 1 distribution on Solana right here. We had the exact same going on, where you have your initial range high, and you have your first sweep, and you have your second sweep, indicating a Wyckoff Model 1 distribution. Let's extend it to that high. Then, of course, we check, okay, where is the break? You confirm this Wyckoff if you break market structure from the low up between tab 2 and tab 3, which is between this high and this high. Market structure from the low up is between these points and these points. And then again, you follow it up, high, low, higher high, higher low, higher high, higher low, higher high, lower low. This is where you have your break, okay? This is where you have your break. That confirms the Wyckoff. It's the exact same. And this one actually has that proper return to zone I was talking about. This is a way better low where it's all curving up. So you have a clear liquidity target, okay? These are the setups where you double down on your risk. Now, as you can see right here, what happened is that you didn't really have any significant supply. Like this whole range break was supply. But within the range break, you didn't really have significant supply zones. So after this break and confirming that lower high, lower low, just following market structure right here, following market structure like this, after putting in a lower high for a lower low, there wasn't really any reason for price to come back above that point. And that point is the exact same point I was talking about in the trade of today. But what happened after potentially putting in your lower high here, again, you started to curve down with a liquidity curve, right? you were leaving on a lower time frame lots of liquidity behind. Look at all these highs, lower high, lower high, lower high, lower high. It was looking like a liquidity curve. What happened is the exact same thing that happened today. You had that pop back up where you literally took that high by the cent. You can call it equal highs, like it's literally by maybe not even $1, like a few cents before pumping down. And once you see this, you know that you're going to hit that range low. But again, the pump up is so aggressive that you have no structure to confirm an entry on the pump up. So when I saw this, I remember I was a hairdresser getting a haircut, and I had my stop here, but I didn't get stopped out. And I actually made very good money on that trade. But I told myself then I have to watch out for those potential pop up, grabbing some liquidity, grabbing that initial LPSY, that lower high that I thought was the lower high before moving down. And I made the same mistake. This wasn't a mistake here because I still profited, but like I forgot today. Like I forgot, I wasn't paying close enough attention. I wasn't making that correlation. And yeah, I made a mistake that I shouldn't have made because I already learned from it way back, right? Like more than, I don't know, 2 months ago. So it was very unfortunate, but it was my mistake. If you see that liquidity curve, don't put your stop on that high. Keep your clear invalidation here. It's the most clear invalidation. And once you see that happen, that's a good thing to remember. Once you see it act up like this, you know it's going to hit the target and probably exceed it because it shows the ultimate market maker involvement. However, we came down, skipping this, we know this by now. Model 1 distribution, that's it. We came down so aggressive towards my POI that I was looking to long, but because we came down so aggressive, I only confirmed trades using market structure. And since we came down so aggressive, there was no market structure to confirm an entry between these 2 points. It's one shot down. And from there, we kind of created a range, and now we're going higher because, as I said, the order flow objective of this local distribution was just to put in a higher low for a higher high because we're in this bigger accumulation. So yeah, it was unfortunate that I didn't manage to get that trade. But like right now, I'm telling you guys, it is imprinted in my brain that I will watch out for those pop-ups because especially on Solana, like Solana just loves to do that for some reason. It's very sneaky. I remember getting stopped out of one of the most best trades of my life right here. I think it was right here. Yeah. I shorted this move right there, and it could be like I was talking about the biggest swing short of my life all the way down to here, and then the same thing happened there. That's why I learned my initial lesson. Okay? But yeah. So I learned my initial lesson right here, getting stopped out at break even, trading my stop, and price went higher before going lower, still aligning with the Model 1 distribution. And then I didn't make the mistake here, but then I did make the mistake here again. So as you can see, it's not always a straight line. Even I make mistakes. Yes, I do still make mistakes. But overall, our idea, our bias, our order flow objection of what we thought was going to happen was right. Because just to prove, guys, I was actually talking about that short. You can see the picture right here. That was the initial short on the range I showed you. I was looking for this to happen. Okay? And the price took some more time, but it never took that high. So this was the initial trade. I was in it, and I got stopped at entry. As you can see, let me pull it up. Right here. If I pull it up, boom, boom. Look at that. I shorted right there, got stopped at entry. Like that. it's very unfortunate. Okay? It's very, very, very unfortunate. But now I have noted it down. I will never make the mistake again. Okay? That was it for today. Just keeping it on a post-trading analysis, no crypto markets update. I'll do that whenever I see something new happen. And if you guys have any questions, let me know in the comments. I'll answer all of you, and I'll see you guys later. Peace.